Again, thanks everyone for joining the Buying a Home in Utrecht webinar. This is one of the first that we're doing about Utrecht, and we're very excited to have you. So what we're going to talk about today is a little bit more about ourselves, of course, because we want to be polite. We're going to talk a little bit more about the mind state of, well, entering the housing market, talk a little bit more about what you would need in savings, 3 tips to win in this market, and about the timeline. We'll share some Utrecht-specific information during the presentation as well. But if you have any questions that are not part of what we're talking about, which can always happen, of course, what we've done is we've tried to create something that has something in it for everyone. It depends a little bit on what stage or where you are in the process, what information you've heard, who you've talked to in the past, whether all the information will be super relevant for you. But hey, we've done our best. If there's any feedback that you have, don't hesitate to share. My name is Kimo. I'm the founder of Expat Housing Network. I'm half Dutch, half Caribbean. I talk fast sometimes. If it's too fast, don't hesitate to say, okay, hey, could you clarify that specifically or anything like that? Pop it in the Q&A, the questions if you have them, because we'll answer them at the end of this presentation. Again, I'm a proud father of a daughter of 4 who thinks she's 16 already, almost ready to buy a home actually. But I bought my own home about 5 years ago. But it took me a while to get my offers accepted. I wasn't in this business back then. It also wasn't the reason to get into this business. The reason for me to get into this business is because I like helping people feel at home and find a home. But back then the market was already quite competitive, and it took me about 7 offers before I got my final offer accepted. And looking back at it, I might even have been lucky for getting my offer accepted back then. But if I would have known then what I know now, things would look a little bit different. Either way, I'm happy with the bridge I made, and I think you will as well once you've defined and secured a property. But greatness is achieved in the agency of others. And well, you've met my colleague Rick, who will be supporting with the Q&A, but there's other people in the team as well who will be helping out in case you decide to move forward with buying a home with us. We're from all over the world, from Brazil, from the UK, from Cyprus, but we've all gone through the same process. We know what it's like to move to a new country, to actually, well, I'll talk about it in a few actually. I think I have a few slides about that. Because what we are, Expert Housing Network, is no traditional real estate agents. None of us have like a proper background in real estate, right? We all come from the liberal arts or from the interest of actually helping people out, psychology or name it. We do by now have a lot of experience with helping people. Initially, we started off with helping people find a home to rent. Then we, years ago, transferred to actually helping people find a home to buy. And now we've helped hundreds and hundreds of people find and secure a home that they now lovely and own. And that's also one of the things I wanted to share with you. We focus on finding a home. So not necessarily searching for it, but securing the home to buy or to rent. We don't do selling or letting of properties. And why is that relevant? Because if you have 2 clients as a real estate agent, and one is a selling client and the other one is a buying client, right now it's a seller's market. So where does your attention gravitate to? Naturally to the easier prospect, right? Which is the seller in this case. For us, we don't do that. We focus and specialize on helping you buy a home. So we've become pretty good at it. Our processes are aligned to do it. We've got a pretty good network. So we like to think, and I don't really like to pat myself on the back, but I think that team has done a great job of actually becoming specialists at this. We charge a fixed fee, so no commissions, no hidden fees, and we know what it's like to sell into a new country. Like I said in that previous slide, the majority of us have either lived abroad or are from abroad. So if for us it's similar and we understand what it's like. They've all bought homes by now and they know what it's like to go through that process. I think, Rick, you actually spent some time in Colombia, didn't you?
Yes, I lived in Colombia for a while, but also in South Africa.
I was in South Africa. So we know what it's like to live in another country and to set up a home there. What's our added value? There's a few things. Yeah. Selling agents take offers that we submit more seriously. Why? It's because we've done our due diligence. We don't go crazy. We don't submit offers that are unrealistic. And we only ask you to submit, or we only ask our clients to submit an offer if they're serious about it. We also can sometimes book in viewings that are no longer possible. And we support, of course, by reviewing legal documents. One of the most important things we do is we help define the market value of a property, so you know what you have to offer before you actually secure the property. And we'll inform you about rules and regulations. And of course, we make sure you don't make the same mistakes that technically I made, because we've become pretty good at what we do. so before you actually enter the housing market, and some of you have already done it, of course, if you've made that decision, I want to share a little bit more about the mind state. Why is that important? Because I think it's very important to understand like what you're getting yourself into. Let's look at some numbers from Utrecht from last quarter. So the average house price in Utrecht from last quarter was 439,000 euros. That is a 6% increase compared to last year. If we look at the houses sold, there are about 1,500 houses sold, which is an increase of 15%. But I must say that compared to the quarter before that, it was a decrease. And the quarter before that was kind of like a winter quarter. It was a quarter where the transfer tax still uh, 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 applied, but still, I think it was like good to see that the number compared to last year has increased a little bit. But I think that the next couple of quarters we'll see it slowly decrease because there's going to be more of a shortage. And the number of days for a property to be on the market was 26 days. Imagine that, eh? 26 days. That's from the moment it actually is posted to the moment it's kind of like sold. And it takes about 14 days. So what happens is an agent puts it up and then he says, okay, hey, I'll have people kind of like request viewings for like a couple of days. And then I have a slot for a week or two to do all the viewings in. And then I sell it, right? That is very quickly. I know that years ago, people took much and much longer for actually the property that I bought was on the market for a while. I think it was on the market for 2 or 3 months. Of course, the seller had the unluck or the was not very lucky because two buyers actually had to pull out because they couldn't get their finances through. But still, it was more common for some of these properties to be on the market a little bit longer. But nowadays, things move quickly. So, what that means is that you have to come prepared, make sure you understand what you're doing, but also understand who you need at what point of the process. We'll talk a little bit more about that later. But what you've probably heard and seen is that prices are increasing. Well, you saw it in the previous slide compared to last year, about a 6% increase, but we're seeing prices all over the country increase. And then what we also hear from people is, but is this the right time to buy, right? Like, aren't I buying on the top or the peak of the market? And it's very difficult to say, of course. Like, we don't have a glass ball. If I would have a glass ball, you would see like a very beachy background in here. And I think the greenery that Rick has, you would see it as well. And I think Rick would also be on a beach somewhere. We'd still be giving this lovely webinar because we like informing people and sharing information. But if we would know for certain, of course, well, things would look a little bit different. But what we can tell you is about the factors that actually make up for the price increase, especially in the Netherlands, because we can't really compare ourselves with countries around us, but we mainly have to look at, okay, what are the criteria for the prices to increase here, and will that change anytime soon? Okay, so let me discuss a few things. First of all is the fiscal benefit. So the government has made it very interesting for homeowners to own a home and for potential buyers to buy a home. What does that mean? The tax exemption. So since this year, people that are 34 years or younger that are buying a property up to 400,000 euros are exempt from transfer tax, which means that the 2% that they would normally pay over the purchase price is exempt. They don't have to pay that. What we've seen is that a lot of these people have actually put that money that they were saving back into the property purchase price. So we're seeing price increases there. Okay, interest rebate. So that is a very, very interesting fiscal benefit. What does that mean? Does that mean the interest that you pay over your property mortgage, you can actually deduct that off your taxable income. So let's say you have a mortgage of $1,000. Well, let's increase a little bit because prices in Utrecht are a little bit higher. Let's say you have a mortgage of $1,500, right? And of that $1,500, you pay about 500 euros or 600 euros worth of interest. Then multiply that by 12, let's say 500 euros to make it easy. That's 6,000 euros on an annual basis. That is money you can deduct from your taxable income. Let's say you pay 40% tax, then you end up getting about 40, well, it's a little bit less because there's some other fiscal rules there, but you end up getting about 30 to 40% back of that money. That makes it very, very interesting to own a home and have a mortgage. And the last thing is capital gains. There's no capital gains tax in the Netherlands. So if you own a home and then it increases in value and then you sell it, you don't have to pay any taxes over the profit that you make. And what we've seen is that a lot of people are putting that profit back, boom, into the housing market. These three things cause price to increase because it becomes much more attractive to own a home. So we're seeing more people flock towards the housing market to buy a home. And then there's also low interest rates, right? Historically low almost. Well, it's not historically low because I think a couple of months ago it was much lower, or it was a little bit lower, but it's quite low, especially on average. Um, I can remember, what was it? Um, 6 years ago, I think the interest rates were about 4%, and now we're at 1.5 to 2%. So imagine that. That's good. And I also know that at the beginning of this century, sounds very long ago, but it's not that long ago. Interest rates were closer to like 6, 7, and at some point even 10%. So imagine that. So interest rates low, which means that money is cheap. Like they're pressing money like crazy. The central banks, maybe they're slowing it down a little bit now, but still money is cheap. So again, why would you rent if the rents are super high when you can buy, right? That's almost a no-brainer. But it also drives people towards that housing market to buy a home. What I feel and what I know is that especially this top part, the fiscal benefits, are not going to change anytime soon. There is an increased pressure on the government, but it's also kind of like the holy grail for them because if they touch this, and especially considering now we have a liberal government, right? If they touch any of this, then they'll lose their, what is it, electorate? They'll lose the people that have voted on them. So we're not going to see anything change at this point, especially also because, hey, they're too busy dealing with COVID, right? So I think it's very safe to say that at least for the next year, 2, 3 years, we're not going to see a price dip. Again, I am not a financial specialist. I don't know the future, but what I've seen, and it was backed up by a report from ABN AMRO, I think at the beginning of this week, they're actually have increased their projections of the prices increasing in the next year, 2 years. So was our last one? Oh yeah, there's a lack of supply. That's the last one. This is probably a thing that you've read about the most or you've heard about the most. Oh, there's a lack of supply versus demand, but demand is created, right? The more attractive you make it to own a home, the more demand you'll see, right? So in the 1970s, I think we had a bigger housing shortage, but because the interest rates were much higher, because there were none of these fiscal benefits, we didn't see as many people flock towards the housing market to buy a home. So prices didn't increase that much back then, right? So I think it's very important to say that because of a combination of this, we'll see prices continue to increase. So if you ask me if this is the right time to buy a home, I would say it's as right as any time, right? One thing I would tell you though is that if you buy a home, don't buy it for 1 or 2 or 3 years. Buy it for a little bit longer because let's say there is a dip after 2 years or 3 years, then you want to be able to weather that dip, right? Because a problem is not a problem if you're not confronted with it. If you are destined to sell your property after 2 or 3 years and there's a dip, yeah, then you have a problem. But if you have the property and there's a little bit of a dip, and you don't have to sell, then you don't have the problem. Don't have a problem. So make sure you buy for at least 5 years or more. I can share a little bit more about what you can do if you do decide to leave the country, but we can go over that a little bit later. Maybe if you have a question about that, pop it in the Q&A and then Rick can ask me at the end of the presentation. So it's a good time to buy, as good as any. Make sure that you buy for a longer term because then you'll be able to actually weather any storms, perfect storms that are coming. I don't expect a perfect storm to come. I expect the price to increase for at least the next couple of years, and then maybe we'll see a correction, but I don't necessarily think it's going to be a correction as big as the GFC in 2008. Bum, bum, bum. Perfect. Okay, so now you're in the right state of mind, right? Okay, we know prices are going up. We know that it's a competitive market. We know that you don't have to be afraid for the price the next year, 2, 3 years. So you can actually build up a little bit of buffer there. Then now you can actually enter the market. But what would you need in savings before you start? There's a few things. So if you're exempt from transfer tax, then this top line is not relevant for you. What we've done is we've added 3 columns. One is the type, second is the actual amount, the third if it's tax deductible. Why did we add that third column? Because the government wants to make sure that you get support when it comes to your mortgage. Why? Because it's a complex product. They want to make sure that you know what you're deciding and picking. So they've said, okay, the amount that you spend that is related to your mortgage is tax deductible. So add all these figures up that are related to your mortgage and then deduct them from your taxable income at the end of the year. So you get money back. Again, it's about 40% depending on what you pay in transfer tax. So what we're looking at is transfer tax, sorry, what you pay in fees. So what we're looking at, transfer tax, that's the biggest cost as well. If you do have to pay it, you'll pay 2% of the purchase price. Then the notary, they'll draft up a mortgage deed and a transfer deed. The mortgage deed is tax deductible. The transfer deed, which makes you a proud owner of a home, is not tax deductible. The bank or mortgage broker, I do want to share a little bit more about that, by the way. The bank is kind of like your old fashioned retail shop. The mortgage broker is kind of like your personal shopper stylist. Why? Because the bank will sell you the products that they have on offer, which is 2 or 3 products. And then the mortgage advisor or the independent mortgage broker, what they'll do is they'll have a range of products, about what, 30, 40 products across different mortgage providers. And they'll try to help you the best way possible because there's no benefit for them in selling you a specific mortgage. There's no referral fee, there's no kickback. That is actually defined by law. That they're not allowed to have that. So what they do is they try to help you the best way possible, kind of like your personal stylist shopper. They don't care where you buy, as long as you're happy, it looks good, and you know where you're buying for. Then you have the typical real estate agent. They charge 1 to 2% of the purchase price. I find that ridiculous. Why would they charge you a fee over what you're paying for a property, right? I think that if you pay more for the property, why should you pay the agent more? Technically, it should be the other way around. If you pay more, you should pay the agent less, right? So, what we've decided is okay, hey, we don't do that. We don't charge a commission like that. We charge a fixed fee. We can tell you all about that later. The appraiser, they'll come in to define the property value. They are tax deductible. Why? Because the bank will not accept anything else. The technical inspector, not tax deductible. Interpreter, it's mandatory, especially at the end of the process. You have the bank guarantee. I don't know why this is bold or big. It's not much more important than anything else. It's not tax deductible. And then you have the national mortgage guarantee. That I think is a topic almost on itself. But yes. So 3 tips to win in the current market: value, value, value. And let's go to this property. This property is on the market for 395,000 euros. That is great. Okay. What we get asked a lot is, what should I overbid over this price, over the asking price? And then I say, like, don't look at it like that. Don't look at the asking price too much. Of course, look at the asking price when you're looking for properties, but don't look at the asking price when it comes to your offer. Why not? Okay, this should have been kind of like a very nice little animation. It's not, that's fine. All the information is out there. Why do I want to share that? Because the asking price is the price that the selling agent defines, right? So the selling agent says, okay, I know what the property is actually worth, but let me put the property up for this because I want to attract a lot of people. If I have sellers or my clients are not super smart or on top of things, I can maybe lower it even a little bit so I can impress them. So what he does is he puts the property up for 395,000 euros. The market value, however, is 415,000 euros. The purchase price, because somebody offered this, was 435. Okay, now that's great because the asking price difference between purchase price is 40K. That's almost 10%. It's a little bit more than 10% actually. Then the difference between market value and the purchase price is 20K, which is about 5%. Okay, this is example number one. Let's say you have another agent which is maybe a little bit more opportunistic, or maybe doesn't know the market that well, or wants to impress the seller more. What he does, he puts the same property up, but for 10,000 euros less, right? Or 20,000 euros less, sorry. So what that means is that, hey, the property is up for 375, but the market value is no different. Then the purchase price will maybe also be no different. But suddenly he can say, hey, I've earned about 60K over the asking price. That is 16% versus the 10% of the previous real estate agent. But the difference between market value and purchase price is no different. Then why do people keep asking, what should I offer over the asking price? Because if you start following this narrative, then that means that, let's say we have more of agents like this than we have of the other agents, then you would start spending 60% over the actual asking price. But let's say you apply 60% to this value, because you might find or stumble upon that agent that, hey, is pricing it a little bit more realistic, then you might pay even more than you should have to. So don't look at the difference between asking price and purchase price. Look at the difference between market value and purchase price. So how do we define the market value? That's what you can use us for. What we do is we look at properties in the neighborhood or in a similar area that are sold in the last 6 to 12 months. But we look at similar properties. So we don't compare properties that are way bigger or that have a garden versus a property that doesn't have a garden. So we look at all of these different criteria and then we say, okay, hey, this is what we believe the valuation range will be. So we'll give you a minimum, we'll give you a maximum. And I think we've been spot on so far. So the appraiser that comes in to value your property will most likely give it a value of anywhere between there and there. So why is this important? Because it's going to help you with securing the property. I'm going to talk about a little bit the importance of this a little bit later, because the most of you will probably want to know what the winning offer is, right? So winning offer is a offer that has a good price. It's not always the highest price. Why is this relevant? I think I have like a the slide here that I was just on now. Why is it not always the highest price? So let's say you've seen this property, right? The market value is 415, and you have 20K in savings, right? But you've offered not 435,000, you've offered 450,000. Then, if the selling agent understands how math works, then he knows that, okay, hey, somebody's offered more, but they don't have enough money in savings to actually secure this. If the market value is around this, they're never going to be able to secure the property and get their finances through. So what the selling agent will do, he will not accept your offer, even though it's higher than the 435. So if you offer a good price, but make it a realistic price based on the market value plus maybe what you have in savings that you want to put up towards the property. It's not always the highest price. Offer security to the seller. This links to that previous point because if you can't offer security to the seller because you've not done your due diligence and you won't be able to move forward with your property or with the deal because you can't get your finances through, then the seller will not go for you. The selling agent also doesn't want to put up double work in, so he doesn't want to start all over again after a month, right? So share a little bit more about the fact that you've done your due diligence, that you've started the process with a mortgage broker or with a bank, that you're very confident that you can actually borrow the amount necessary or that you have enough in savings, stuff like that. And then offer the least amount of hassle because sellers will not want to kind of like work on their property the day or the week or 2 weeks before they have to leave. Of course, if it's a reasonable suggestion, for example, having the boiler checked or filling up some holes, then you can definitely ask that. But if you ask them to repaint the whole property or something like that, that is not realistic, right? So what they'll then do is if you have a comparable offer next to you and you request like everything to be done to the property, then they'll go for the least amount of hassle. Also, offer personal touch, especially for homeowners who are selling the home that they've lived in. If it's an investor, he doesn't really care. He wants the highest price. If it's a homeowner, they have an emotional attachment to the property. So, what? Share a little bit more about yourself, maybe a photo with some text why you love the property. I think that definitely helps. So, a little bit of a recap: offer a good price, not always the highest. Offer security to the seller, so don't add in a lot of clauses that allow you to kind of like pull out. Be realistic to come when it comes to that. Offer the least amount of hassle. Have him only do or them only do the essentials or the criticals if you think it, but don't create kind of like a big list of things that you want to have done. Offer personal touch by sharing a little bit more about yourself. Okay, so then we've talked a little bit about this, not always the highest price. Then the last tip I'm going to give you is due diligence, right? So there's two parties that are relevant and important in this process. There's a few more, but I'm going to highlight these because you'll face these rather sooner than later. The technical inspector and the appraiser. The technical inspector comes into the property and lets you know this is a great property, but this is wrong with it. This needs renovation. This needs work. This is what it's going to cost. The appraiser comes into the property, looks at it, goes away, does his work behind his computer, and says, this is what the value of the property is. Why are they relevant? Because, well, you don't want to buy a property that you end up having to renovate completely unless you want a fixer-upper. And the second one is that the bank will not give you a mortgage unless they know what the value of the property is based on an appraiser that sent the report to an independent institute first. Okay, the question is, do you book these guys before or after your offer is accepted? And please feel free to pop the answers in the chat. Ashley says before. Alice also says before. So a lot of you are saying before. That is interesting. Have to go to disappoint you. Why? Because let's say you submit the offer and you've done all of the due diligence, like you've had an inspector, an appraiser come in, and technically these guys cost money, right? So it's about $1,000 to get them in combined. If you do that before you get your offer accepted, hey, I think chances are your offer will not be accepted the first time unless you have a knockout offer or you have thought about it really well. So don't get them in before your offer gets accepted. Get them in after your offer gets accepted, and don't wait too long to get them in. Why not? Because you want these reports. When do you want the reports from them by? You want the reports before you're officially committed to the deal. And this is maybe a trick question a little bit, right? So when people submit an offer, and I can understand that. Like some people think, hey, I'm committed as soon as my offer is accepted. But you're not. You're only committed when the purchase contract is signed and 3 days thereafter have expired. So what we call this period, the period between purchase contract signing and cool off period, well, we, that's the cool off period. That's what we call it. These 3 days, it can't end on a weekend, and you have until kind of like this very last day to pull out of the deal without giving any reason. You might have incurred some costs, right? But you're not committed to the deal, to the property. So when you get these guys in, you get the technical inspector in directly after you got your offer accepted. Um, then some of you might ask, but how then do I define what the market value is? Well, the market value is what the agent can help you with. Or there's a land registry website and you can do the puzzle yourself, but it's not always the easiest puzzle. So you get the valuation rates from us before you get the offer, or submit the offer, and we'll help you with submitting the offer. When your offer is accepted, then you get these guys in because they cost money. So you don't want to spend that money before you actually know that your offer is the best offer, or at least the most attractive offer. Then you get them in. Don't wait too long. It takes about a week to get an appraisal report. It takes about a couple of days to get the technical inspection done. And you want these reports in before the cool off period ends. Why? Let's say you submit an offer and it turns out that that market value is lower than you had anticipated. Then most likely you've submitted an offer without us. But let's say that happens, right? Then the appraiser comes in and says, no, sorry, it's not worth what you thought it was. And then suddenly you'd have this gap because you don't have enough money to actually make up the difference. Then you want to be able to pull out and not be committed to the deal, right? So make sure you get that reporting before that cool off period ends. The same thing applies for the technical inspector. Make sure that you understand what the condition of the property is before you enter into that full commitment, right? Okay, then the last bit of this presentation, and I've been talking a lot, and I'll leave it up to Rick after this to answer or to ask some of the questions. This is the timeline of the full process. So you start with the search, and I must say that this period, like from start search to getting your offer accepted, is a bit skewed because it might take weeks, it might take months. It depends a little bit on what's on offer, how often or how fast you get your offer accepted. But for like example purposes, let's say, hey, you got your offer accepted. That is great. We just talked about getting the appraiser and technical inspector, right? So that happens then. Then you have the purchase contract, which you'll sign. The purchase contract is the agreement between you and the seller. Well, you say, I'm going to buy this property. The seller says, I'm going to sell this property under these conditions. It's probably one of the most important documents that you'll sign. It's not the most official document, but is one of the most important documents. Then you technically can submit the mortgage application, but don't wait with starting the mortgage application until after you sign a purchase contract. Get in touch with a mortgage broker, and maybe this is a good question. If you haven't chatted to a mortgage broker and you want us to actually connect you to a mortgage broker, we know a few pretty good ones that can actually help you out, that have been helping out internationals for years now. Then maybe pop the email that you have in the chat. Just pop it in the chat if you want us to connect you with a mortgage broker who can actually support you. I would advise talking to both a bank and a mortgage advisor. Just get a feel for the both, right? And also make them work for your money. In the end, you're paying them money and they should actually offer you that added value. But if you want us to connect you to a mortgage advisor, then just pop in the email in the chat. So don't wait until you've signed the purchase contract with actually chatting to somebody. But once you've signed a purchase contract, you can officially start that mortgage application, and then you still have that cool off period, right? So if you are reconsidering, if you wake up in the middle of the night sweating, you're like, oh my God, what did I do? Or maybe something happens, right? And you have to go home, or I don't know, and you want to pull out, then this is the very last day that you can pull out. It can't end on a weekend or a public holiday. So make sure you understand when this day actually ends. Now, this is where the boring stuff starts a little bit because the mortgage application takes up a few weeks, especially in summer. It can take up a little bit longer because of the holidays. But let's say your mortgage application is approved. Congratulations, you've got the monies from the bank. Then, about 7 days before your key transfer takes place, there will be a final note in the mail from the notary. The notary is the person that will have to actually draft the official deeds. The official deeds. It sounds also very official, right? So those are the two documents that make you the proud owner of a mortgage. That's the mortgage deed. It's the agreement set in stone between you and the bank, and between you and the owner. So technically what it does, the transfer deed, that is, it transfers the title of ownership from the owner to you. You become the official owner. But all the costs that we talked about a little bit earlier on in the process are costs that still need to be completed. So what the mortgage or the notary do does, or dudette does, he has like a list and he says, okay, this is what the property cost. Then on top of that, we have all these purchase fees. Then what we do is we deduct the money that's already been paid. For example, the mortgage, we deduct off that, and then we have like an amount left that still needs to be paid. That's the final note or statement of completion that you'll receive. Okay, that happens about 7 days before you get the keys. Then on the day you get the keys, you first go to the property to inspect it. You want to make sure that the property is in the same condition it was when you last saw it in, because sometimes when people move, they break things, and you don't want to end up moving into a home that suddenly has all these big surprise, right? So you inspect the property. You don't have to inspect everything, just have a visual inspection. And then after you've inspected, you go to the notary because, hey, those two deeds still need to be signed. And as soon as they're signed, then you'll get the keys and you'll be the proud owner of your property. Congratulations. Well done, well done, well done. Okay, now what happens? You've inspected the property. What happens if 2 days or 3 days after you've moved in, you find out that something is not working as it's supposed to? Technically, you have 2 months to notify the seller about any of this, especially if you think it was already the case when you moved in, right? And this is important because the longer you wait, the more difficult it becomes to prove whether it was already the case when you moved in. So make sure you don't wait for 2 months before you actually share it. Do it as soon as possible because then you can still hold the sellers liable to some extent. Let me give you an example. So we bought a property and it turned out that one of the power sockets wasn't working. That's not that big of a thing, right? Maybe there was like a wire that was loose, but then we had an electrician come in, or the client had an electrician come in, and he said, okay, hey, no, it's not just a socket. You have to rewire the whole circuit. It's going to cost you about 1,500 to 2,000 euros. And that was a thing, right? Because you don't want to have a surprise like that the first week that you're in. So what we did is we said, okay, hey, sorry, Mr. Seller, you knew this or you should have known this because you've lived in that property. You didn't disclose it. And now we end up with this issue. So we're going to hold you liable. We did successfully, and the seller actually paid for the renovations there. So that's good. But if we had waited for like 2 months to mention that, it would have become much more difficult. And he could have said to the seller, like, no, I didn't have any issues. It was working back then. So you've waited too long. So don't wait too long with actually, yeah, um, informing the seller about this. Okay, that's a lot of talking from my end. This is the time to ask questions. Rick, take it away. Okay. Yeah, it's a good question. So if you leave the country after a couple of years, there's a couple of things you can do. You can keep the property, but you have your mortgage. You can sell the property and don't have any capital gains tax, and then you can take the money with you. You can also keep the property and change it into a investment or buy-to-let property. The implications thereof are that you have to change your mortgage, and the interest rates are a little bit higher for a buy to let. Plus, the bank will probably require you to make sure that the loan to value is about 70%. So let's say you have let's make it super simple. You have a property of 100,000 euros. Then, if the value of that property is 100,000 euros, then the bank, and if they've given you a mortgage of 100,000 euros, then the bank will say, sorry, but we need you to put up a down payment to make a better loan to value. So what we're going to do is we're going to ask you to put up a payment of what, 30%. However, if the property has increased in value and it's now worth 130,000 euros, but you have a mortgage of 100,000 euros, then the bank might say, perfect, that's fine. We'll give you the buy-to-let mortgage. So there's two criteria. Make sure that you understand what the down payment needs to be, if there's any down payment at all. The second one is the interest rates will be a little bit higher. Then you can transfer your mortgage from a residential mortgage to a buy-to-let mortgage. But you can't live in the property anymore then, because you have to rent it out. So you can't have a buy-to-let mortgage and then live in the property yourself. So there has to be kind of like a tenant. Yeah, no, good question. So the purchase cost, so the purchase costs are not to be included in the mortgage. So the mortgage is 100% of the value of the property, and that means that you have to have that money that I just shared with you in savings. How much is that in total? If you pay transfer tax, take into account about 5% of the purchase price. If you don't pay transfer tax, it's about 3% of the purchase price you have to have in savings. Yeah, that's a good question. And the answer is yes, yes, yes. The only exception that the bank makes in giving you more money than the market value is when you do renovations or when you want to make your house more energy sufficient, right? So let's say you want to redo the kitchen, redo the bathroom because they look terrible. And what you can do then is define what the value of the property is before renovation, define what the value is of the property after renovation, and then you have to figure out what the cost will be of the renovation. And the bank will give you what about 60%, maybe 70% of that cost structure. So you still have to put up some of your cash yourself, but you can definitely borrow a little bit more. We call it a building depot. Yeah, good question. Yeah, that's a good question. So let's say let me go back to that screen. So let's say that after cool-off period ends, you pull out of the deal. Then if you don't have any clause in the contract which states that you can pull out, then technically the seller can hold you liable of a fine of up to 10% of the purchase price. But if you have a clause in it that states, if I don't get my mortgage or the amount that I need, then I'll pull out, then you can do that. Or if I'm not happy with the technical inspector report, then you can pull out. But the more of those clauses you add in, the less security you'll give the seller, right? So please do weigh out what you want to put in there. Yeah, it can definitely vary. So if you sign on Wednesday, then the cool-off period technically starts on Thursday, Friday, Saturday, but it can't end on a weekend. So it'll end on Monday, right? So Wednesday is the longest kind of like you'll have as a cool-off period. But if you sign on Tuesday, then it starts Wednesday, Thursday, and it ends Friday night. So it can definitely vary. If there would be a public holiday on the Monday and you sign on Wednesday, then it could actually even end on Tuesday. So please be mindful of that. The bridge contract should say that. No, no, the transfer tax is something you have to pay out of pocket. So the bank does not give you that amount as a mortgage. That is a good question. So I would say as soon as you've heard that your offer is accepted, get them in, right? Call them because sometimes it might take a few days for them to come in. But what you can do is when you submit an offer, you can give like a bit of a timeline to the selling party, right? So you can say, okay, from offer acceptance, like we'll try and sign the purchase contract within a week and a half or 2 weeks of getting our offers accepted. So that gives you some time to arrange everything. I would also be transparent with the selling agents. Okay, like we want to book in a technical inspector then and then. Can you please support that? So yeah, sometimes they're busy. We've seen times, I think it was especially around the 1st of March, they were like really crazy. Now it slowed down a little bit. I think it'll pick up again. So it depends. There's multiple parties out there. We can support you with this, but there's multiple parties out there you can book. So you don't have to just go with one if they turn out not to have any space in their agenda. I hope that answered your question a little bit. So how do you force a seller to be responsible? That's a difficult one, right? Because sometimes it's just bad luck. We had one case where the dishwasher was working perfectly, but 2 weeks after they moved in, it died. What do you do then, right? It's very difficult to prove. It was working for 2 weeks and then suddenly it died. We knew it was a bit of an older dishwasher, so it could have happened. It could have also been continue to live for like years and years, right? So it's very difficult that. But if it's obvious that it wasn't working on the day of transfer, then yeah, technically you can hold the landlord liable. That's a Dutch law, by the way, right? So it's not like they can get around it. The only difficulty becomes is that can you prove it or not? So that's why I wouldn't wait for any things to surface later on. I would just inspect the property, bake that cake in the oven, make sure that you understand what works and what doesn't work. I hope that answers the question a little bit. Yeah, and
Yeah.
it's a very good question. So we have two different packages. We have a smart package and we have a complete package. The smart package is the package where we support you mostly digitally. So what we do is we come into play when you've seen a property that you love. What we'll do is we'll do the market valuation, we'll do the property research, so all the property documents, we'll submit the offer, negotiate, we'll of course draft the offer and chat with you about it, but we'll do everything there afterwards. So we'll set up the bookings with third parties, we'll make sure you understand what you're signing for, we'll chase the mortgage broker and so on. So those are things that we do for the smart package. We charge 2,000 euros flat for that, but please be mindful that we're going to increase that price in the foreseeable future. So if you do want to get an intake with us, don't wait too long for that. And then we have a smart or a complete package where we actually join you on viewings. We call the agent to schedule viewings and we go to all of the meetings. We don't do that with smart, we do that with complete. We charge a little bit more, or a lot more actually, for the complete package. We charge 4,800 euros for the complete package. That package will, however, decrease in value a little bit because we want to bring them a little bit close together, because the difference is not justifiable, and we're always tweaking what we do, right, to make sure that it makes sense for both us and for you. This is something that will probably decrease in price in the foreseeable future. I'm too honest, am I? Jesus, that's not really selling it. But either way, that's probably one of the things that we're proud of, the fact that we're transparent, that we're honest, that it's about your experience and it's not so much about moving bricks or closing deals or making money. It's of course part of what we do, but it's not the most important thing. Yeah, so you can switch back and forth between residential and buy to let, but please note that banks don't really like it that much. There might be a penalty if you change the mortgage. So I wouldn't do it too often. If you go for a short period of time, then you can always discuss this with your bank. Let's say if you go for a year or 2 years, then there are some banks that approve that and say, okay, hey, you don't have to change the actual mortgage, but you have to put in the rental contract that you will move back after 2 years. So this is something that I would look case by case, but please feel free to reach out if you have any specific questions about it, if you know when you're actually leaving the country for a year or not. If you're leaving the country for longer or for an indefinite, or you don't know how long, then I would definitely change it for a residential mortgage to a buy-to-let mortgage. Yeah, good question. So in terms of the areas, I think that there's several things you want to look at. Not necessarily the specific areas itself, but what do you see yourself do in a house that you want to buy, right? Because I've made one of the mistakes, and when I bought a home, is that my partner was pregnant back then, and we bought a home, and that was with without a garden. And then now, a couple of years later, we're like, oh, we should have bought something with a garden. So have a think about what do you see yourself doing in the foreseeable future, in the next years in the property. Then when you know that, and you also know what kind of like environment you want to live in, have a look at those environments. And then what you can do is you can compare property prices, but don't compare the amounts, total amounts, compare the square meter prices. Um, what I would say is that the benefits of buying a old home or older home is that the seller has lived in it, so he knows what's wrong with it, but it also has character. The downside of it, though, is that it needs more maintenance, right? It might have an energy label that's not as good. The benefits of buying a new built home or a home that is relatively newer is that the quality is much better. The energy label is therefore much better, so you'll have lower utility costs. But also, especially if it's a new build that still needs to be finished, you can influence the interior somewhat. But there's also some downsides to buying a new build. Um, and the downsides of buying a new build are that you'd probably have double the cost initially, because you have to pay for your rental home and you have to pay for the mortgage, because you buy first the land, then you buy the property, but in layers, right? So that's something that I would take into account. Any Utrecht specific things? No, I don't necessarily think there's Utrecht specific things that you need to look out for. I would consider, like, if you buy in the old town, I would definitely get a technical inspector on board. If you buy a newer build, you might consider just waiving that, right? But especially if a property is older than 50, 60 years, get somebody in to inspect that property. Foundation, yeah, closer to the canals. That's something that I would definitely inspect. I hope that answers some of the questions, though, by the way, because that was a very broad answer. What I would do is like schedule an intake with us, because this is something that I would like to do with the actual map and the properties, because there's so many different variables. Like, and I think the most important thing is understanding what it is that you're looking for, right? So I can now name different areas that you could buy in, but I think that it really is specific to what your preferences are. And then we can look at, okay, hey, some of the new builds there, we could look at some of the pros and the cons, but always have things like accessibility, but also amenities. Have those things in play in your mind when you look at new builds, or when you look at areas that you want to buy a property in, and then still compare, like, not necessarily the new builds to the properties that are in that area, because sometimes it's difficult, but have a look at some of the other properties that are in that area, right? Like, what do they say and tell you about the type of buildings, the type of homes, the value of those properties? Because if there's a really big discrepancy between the properties that are already there and the new builds, then you want to figure out why that is. But this is a bigger contextual question, so I'm happy to answer that. But I think it's better to do that in a intake. Also considering that we have only a few minutes left, so maybe that's a bit of an unsatisfactory answer, but please don't hesitate to reach out if you want to actually get the follow up on that one. So I think that's something that can differ by property. We don't see it as much in Utrecht as we see it in some other cities, but it's still out there. What it means is that you have to look at a property and see, okay, hey, if it's freehold, which means that it's owned by the owners, or if it's ground lease. If it's ground lease, then I think about 80% is owned by the municipality, which means that you're renting the ground from the municipality, which is fine. But if it's owned by a private owner, then stay away from it, because your bank will not like that. If it's owned by the municipality, then you'll pay a monthly fee, or sorry, an annual fee. And this can change after a number of years. So have a look at that. So what I would do, rule of thumb, is if it's nailed to the property, if it's stuck to the property, then it's mostly included. So kitchens are most of the time included as part of the property. However, dishwasher and stuff like that, washing machine or dryer, those are most of the time part of the belongings of the owner or seller. So discuss with them if they're part of the transaction. And most of the time, no. That's it, guys. So it's 12. This was an hour. I hope I was able to answer most of the questions. If you have any further follow-up questions, then don't hesitate to reach out. My name is Kimo. Rick, thanks a lot for supporting with the Q&A. Hope it was a useful webinar. Have a lovely afternoon, and don't hesitate to reach out if you have any further questions. We're happy to support you. Thanks. Take care, guys.